Hello friends, welcome to the VAT action plan video. In this video, we will be talking about how businesses needs to be prepared for the new tax VAT that is being implemented from 1st January 2018 in UAE. Businesses need to be prepared to make significant changes in their business practices in order to comply with the new VAT system. This also gives us an opportunity to update procedures, improve record keeping and better credit control systems. We need to understand how VAT affects the business strategies and business practices. We need to put attention to detail regarding invoicing, credit control, cash flow requirements, timing of sales and purchases, pricing, marketing, return preparation, contracts, legal matters as well as staff benefits and contracts. The first thing now we have to do is we need to break down our business into different departments. For the purpose of VAT, let's break it down into 4 separate departments. The first one would be the finance department, then HR department, procurement department and the customer services department. Now let us evaluate the process of issuance of customer invoice for each nature of supply. The first and foremost, make sure that the billing and accounting module integrates. Then we need to see whether the customer invoice is being issued by the finance department or the customer services department, as we need to train those guys to account for correct VAT on the invoices. The third is an important one is the time frame to issue the invoice, because the VAT law mentions that within 14 days of issuance of goods or services, the invoice must be issued. Next one is the invoice format, which is currently in use. We have to make sure that the invoice complies with the VAT law. Also make sure that the VAT module exists and the treatment of VAT on advances and deposits must be done correctly. The next part is the evaluation of process for recording, receiving of the supplier invoices. We must obtain VAT registration number of the suppliers, ensure that the VAT is charged by the supplier at the correct rates, input VAT is correctly recorded and the invoices are recorded in time. We need to also evaluate the accounting software that is in use at the moment, whether it has capability to include VAT or not. Also, we need to make changes to the new chart of accounts to include that the input and output tax accounts are created within the new chart of accounts. We need to ensure VAT is accrued properly at month end and VAT returns are filed quarterly or monthly as the case may be.